So as you can see, I've already implemented my back testing tool. Now, Hervé, I remember we talked on the phone, and you had questions about the replay tool. And this is the replay tool. It gives you the ability to actually go back in time to figure out exactly why price went a certain way. So you'll have to have a paid account to get that, but I've already implemented that as well. So I'll show you what that looks like. So this is where current live price is at now. This is where price is moving on the Asian session. But let's say I want to go back and kind of test my strategy of what price did in the past. I can do that. So when I go back in time, let's see, let me find a good strategy to see what price really. This is where I actually decided to implement my replay tool here. So let me grab the replay tool and do that where I was. So I did that right here. All right. So imagine current price looks like this. You're entering into the London session or the New York session, the price is like this. All right. So I'm going to pretend that I'm actually 8 in the morning in the New York session like I do. And I'm going to kind of just show you exactly how I mark up my charts now. I've kind of learned this strategy from my cousin as far as marking up market structure. I think it's very effective. It might be a little bit different than what you guys are used to, but it's actually helped me a lot as far as figuring out what current price is when it comes to market structure, and then figuring out a good entry based on all the other indicators I use. So the very first thing I do is mark up market structure from the 15-minute time frame all the way to the 4-hour time frame. Now you guys are probably wondering why start at the 15-minute. Well, I asked the same question to my cousin, and he said it's good to go back in time because when you go from the 15-minute to the 4-hour, you get a very vivid picture of what price did in the past and what it's probably going to do in the future. So typically I try to go back as far as possible until price basically doesn't show anymore. So you go all the way back as far as possible, and you can see that price actually stops here. So this is as far back as TradingView goes, as far as recording past price data. So then what I do is I go ahead and put a vertical line here, okay? And then what I do is I start marking up market structure. Now, I base my market structure off of institutional liquidity. So basically, what I'm looking for is areas where price actually hits support or resistance once or twice, sometimes 3 times, and then instantly spring up into a bullish trend or a bearish trend. In this case, price hit support here twice. So it made price spring up into a bullish trend, causing an imbalance in price. I'm going to explain that in a minute. And then you can see price went up even further. So now I have an idea where to put my horizontal lines and zones. So then I put another one here because price interacted with this zone and made price spring, and makes price blow up into another bullish trend, a very, very huge bullish trend here, okay? But whenever you see price spring up this high or it sells, if it springs up in a bullish trend this high or this low, just know the institutions are behind this. How do we know? Because the institutions and anybody that has large money in this market, like hedge funds, or whatever the case may be, they have the money to actually make price go up that high. I mean, go up that quick or go low that quick, if that makes sense. All right. So there's always keep that in mind. So I think this is a good liquidity point here. And then I'll just put one top right here, possibly one all the way up here. Matter of fact, I might just bring it down a little bit up here. Then the very next thing I do is I go ahead and draw my zones right next to these horizontal lines because I want to make my zones extra crispy. It's almost like when you go to Popeye's chicken and the chicken comes straight out the oven. You want, that's the best chicken to eat when it's fresh, right? So I like to do the same thing with my zones. Kind of like to just keep it that way. It lets me know exactly what is price doing with these zones. So that way I get an idea of what price is going to do in the future, just like it did in the past. Now, just to give you guys a little bit of a warning, my computer likes to be a hater, and sometimes Zooms act up. So if it acts up and I end up frozen, then I'll just come straight back in. So I'm just letting you guys know. All right, so I mark up my zones. So now I marked up my zones next to the horizontal lines, as you can see. So price is interacting very well. So now once I've done that on the 15-minute, I go to the 30-minute and basically do the same exact thing, okay? So then I go all the way back to where I marked up the 15-minute and I find that vertical line, all right, the vertical line here. So now I see that there's a little bit of marking up here and down here. So what I do is I take a vertical line and hit it here because it lets me know that these zones are marking up for the 30-minute time frame. Okay, so then I want to kind of come in just a little bit here. There we go. And then as you can see, there's a good resistance up here. I'm going to change this to green because the green represents the 30-minute time frame, okay? And then I go down here. And then I draw my zones on these here. Light green. So these represent the 30-minute time frame. So then once I do that, I basically kind of scroll to the right just to make sure I got everything, 30-minute time frame. If I see that everything is pretty much marked up, like I see this here, I probably might mark this up as well. And then go on to the 1 hour time frame, okay? So now we're going to go on to the 1 hour time frame. Same exact thing. You're basically just marking up great market structure and zones from the 15-minute to the 4 hour. So as you can see, I did that all the way to here, okay? So now we're going to get the 4-minute time frame down here. So then I'm gonna go ahead and put a vertical line here. And then what I'm going to do is just mark up this. So as you can see, this is a good liquidity area. Price hit this at least 2 to 3 times and force price to shoot on down to this next zone. So this is a good area here. So this is going to be red. I see some good liquidity here because as you can see, price interacted with this zone and sprung up to the next zone here and caused an imbalance in price. All right. So you get the idea of what you want to look for when you're looking for where price is actually interacting. So then I draw my zones here. So then we're going to make this red because this is the 1 hour time frame. Okay. All right. And then basically I scroll to the right. You know what I mean? As you can see, do the same thing here. You know, just try to fill in the gaps, but you know, just make them nice and neat, you know. Fill it in down here. And so then put it right here. Put that right there. All right. Then what I do is I go on ahead to the 4 hour time frame. Now, as you can see, these are the different time frames we have marked up so far. So then I pretty much scroll, I pretty much scroll all the way to the left until I hit current price, which is here. And then if there's any other zones I need to actually mark up, then I'll do that. So probably in this situation, I'll probably just move the zone down here just to kind of clean it up. And then once I've done that, then I go back to the 15-minute time frame, okay? And so now, as you can see, because of all the zones that we drawn from the 15-minute to the 4 hour time frame, these zones are, you know, moving perfectly on price, okay? Now, probably in this situation, I'm probably just going to erase this zone because I really don't need it, because the indicators I'm using, I'm going to actually use this space as a way of identifying which way price is going to break and retest. So now that I've done that step, the very next thing that I do is identify the trend in the market, okay? So in this situation, when we look at price here, when I look at current price, it's really trending, okay? It's consolidating. Of course, it did a drop, and then it did a bearish run here. But really, in reality, I look at it as consolidation. So I look at a consolidating market because we haven't really seen a breakout between any of these lines here. You know, if you put a horizontal line here, you put a horizontal line really here. I mean, price kind of did break out here, but it was kind of almost like a fake out. I mean, it broke out here, but when you look at current price here, price hasn't really broken past these lines yet. So I really look at this consolidation. So then at that point, if I see that price is consolidating, especially, I mean, I even do this even if price was going to a downtrend or uptrend, but in this case, I see consolidation. I'm waiting for a breakout. So then the very next thing I do is I start going through my indicators. One of the indicators I use is the higher high, the lower low strategy. It helps me to locate the most recent high, all right, and the most recent low where current price is at. So as you can see, this is the most recent high here, next to current price, but really even here and here. So I will wait for price to either break out through this high or this high to consider the buy. If I want to sell, then there's this little blue line here. I will have price either break and retest and sell here, because you always want to wait for a clean break and retest. Okay. Now, once I have located that on this indicator, that's when I take my horizontal lines and I have two white lines that I call the X factor. The reason why I call it the X factor is for the simple fact because my mindset is if price break and retest any of these white lines, that's going to give me the incentive to make a decision on whether I buy and sell, plain and simple. Now, once I have identified that, then I turn off this indicator, all right, because I want to see if price is going to break between any of these lines. Very next thing I do is I turn on the order block indicator. Now I do have this available. This is an order block indicator that basically is going to show you imbalances in the market. And I'm going to explain that, and then also order blocks. This is what you want to learn once you get your retail skills down pat. You want to learn the institutions. That's going to get you the most consistent trades, okay? So when I turn on this indicator, I have it set up to where you see all these gray lines, right? That's a sign of insufficiency in price, or what we call institutional imbalance. So here's how institutional balance works. So let's say we're going to look at this previous trend here, right? The institutions put billions and trillions of dollars into this sell. So price instantly shot down really, really fast. So the institutions made a lot of money from this order, okay? But it caused an imbalance. Why is that? Because for one, there was a lot of buy orders that didn't get filled. So there was a buy order here that that still ended up being a sell order. So even though the institutions made a lot of money on this sell, but they also lost a lot of money off of these buy orders that didn't get filled. So what do they have to do? They actually have to bring price all the way back up to that point to sell it off to be back into the positive. So when you look at price here, price came all the way down to the zone, hit this liquidity, bought price all the way back up to this point so they can mitigate some of this imbalance up here, okay? And then they went into a consolidation, and then mitigated half of this area because of this imbalance that this buy created. Now, you notice with these imbalance moves, when the institutions send price back to fill these orders, you notice that these are strong bearish and bears and bulls moves, and they're most consistent. Can you imagine if you got into a buy here with NAS100 and stayed in and got out of here? You would have made a guap of money. So that's how I actually make consistent profits in the market. So when I'm looking at current price here, so I see that they bought price halfway here to fill this imbalance as well, okay? But from this previous price, there's still a lot of imbalance that they haven't filled out yet, right? Because when you look, they've only gotten this far to fill in the imbalance. They still got all this to fill up. So my mindset is that eventually they're going to have to fill this imbalance from this move and this and the rest of this from this move, and they're going to have to fill this. So the question is, which one are they going to fill first? We don't know. But what I do know is if price breaks and retests and sells, then I already know they're planning on filling this imbalance before they bring price up, or vice versa. If price break and retest and go up into a buy, then they're trying to fill up all this imbalance up here before they come back down and get this. But either way, whether I jump into a sell and they fill this imbalance, or I jump into a buy and they fill in this imbalance, it's going to be a very strong move, and I'm going to show you that in a minute. So now that I know this, what I do is I use these as my take profit lines, okay? So basically I put my take profit zones there for the sell, then I do one for the buy here, and maybe even one up here. So then I do that, and then the next thing I do is when I go to my order block indicator, I click on the order block finder, because I'm looking for order blocks in the market. We can see an order block here. So it might be an indication that price might instantly sell because they put an order block here. But then in the same token, there's an order block down here as well. So they might shoot price up. So sometimes I use this as another guide to let me know which way price is going to go. I would say it's 80% accurate. Sometimes it's accurate, sometimes it's not. It just depends on what they want to do. But sometimes this really, really does help. So if I see an order block here, then I probably have in my head that they're probably going to sell price down. But usually what I do is I wait for the 9:30 bell to know for sure where price is going to go. So now that I know that it's a possibility price could sell, but I still have in the back of my head they could drive price up. So then the next thing I do is I take out my risk to reward tools and I go ahead and set that up. So I typically put my risk to reward tools because I try to get at least a risk to reward of 1. So my goal is to try to get at least 10 pips of NAS or more. So 10 pips of NAS is probably like 500, 600 pips. So 500 to 600 pips is probably right here. So I probably would put take profit 1. But that's a good amount of money depending on your lot size. Now, that would be TP1. And then I would bring TP2 down here. Just in case if they continue to push price down, this imbalance, push it down to this zone, then I get, a lot of pips if that happens. So that's what I like to put. Let's see, for some reason my screen is freezing up. Okay. Hold on, guys. All right, so as I was saying, so the reason why I put my risk to reward tools here is because it already gives you the stop loss and take profit to put in and price decide to go that direction. So you can paste it in your MetaTrader 4 and just leave it there. And then when price goes that direction with a clear break and retest, you either hit buy or sell, and you're instantly in the trade at the right time. Now, I know there's a high possibility that price is probably going to buy up. Now, even though we did the replay tool, we did see that price did buy up. So we know that already. Let's just say we don't know what price is going to do. But there's a huge chance that they could drive price up to fill this imbalance first or do that down here. So now you just have to wait for the move. So then I put a long position here. That's going to be the entry. Stop loss here. And then I'm going to try to get a risk to reward of 1, which is almost as 1. So that's good enough. So if I do that here, that's going to be a lot of pips and NAS. And then I probably will make this take profit too. So I would just bring that up to here. And do that. And then once I have these set up, then what I do is I go ahead and just set my alarms for my take profits. I do all that. And then the last thing I do is I turn on a Delorean EMA indicator. The Delorean EMA indicator is just an indicator that I use as extra confirmation. Typically, a lot of people have used this indicator. It's very accurate. So anytime when the yellow EMA crosses the red EMA, it usually signifies a very strong downtrend or uptrend, kind of like what it did here. You kind of even see it here. The yellow EMA crossed the red EMA and did a huge buy. So it's very accurate, very accurate. I've been using it for a while. So anytime when this crosses over the red on top of my confirmations with a break and retest, and that usually gives me extra confirmation to go ahead and just buy or sell depending on the situation. So now what I'm going to do is actually kind of play the replay and show you guys where price ends up going. So let's just say we don't know where price is going to go. We're just sitting on our hands and wait. So then this is what I typically do. So you see that price bounced and it probably did kind of sell down to this point. So I mean, I probably could have got a sell here because you see this big wick, but then all of a sudden it went back up because it's hitting this as liquidity. And then it's bouncing down this as liquidity. So you could have sold this, right? And you see this wick here, so price did sell. So it actually went down to here over 1,300 pips. So it just goes to show how accurate that order block was, that red line we saw up here earlier. But now let's see what else price does. But now guess what? You could have sold here, jumped out, but then guess what? Price broke and retest, and it didn't even break and retest, it just shot on through. So you could have just went on ahead and jumped into a buy because it shows that price is really pushing. Now at this point, price went all the way up until this point. You see there's over 1,700 pips. So that's smash take profit 1 instantly. But let's see how much farther price goes. Now, you can see previously here, and remember what I talked about. Let me just go back a little bit. You see all this imbalance here. There was an imbalance here, right? So what did they do? They came back and tried to fill half of this imbalance. And they bought it down, and this wick touched this imbalance and took it out. So they were actually trying to mitigate this imbalance move before they decided to push price up. So you could see the power of trading imbalances in the market. It's very consistent. Why is it consistent? Because all the big players in the market that have all this money are pushing price in these directions to fill these imbalances. So if you want to be a successful trader and get in the most consistent moves, you want to trade when they trade, point blank period. That's why we learn how to trade like the banks do. But anyway, let's go back to what price did. So price went all the way up to here. Instantly smashed take profit 1. So you could have closed this first partial trade and let the second partial trade run. But now it's going up even further. So you're talking about over 2,400 pips worth of NAS. So depending on your lot size, you probably would have paid off your house. Well, not paid off your house, you would have paid your house payment this month. No joke, no joke. Went up even further. So now you're talking about 2,800 pips. Let's see if this smashes take profit. Oh, yes, it did. See, they knocked out this imbalance up here. Now you got another imbalance here. Let's see if they knock this out. Now at this point, this is over 3,300 pips. Now they're knocking out this imbalance. Remember what I told you guys. They're either going to get this imbalance first and then drive price up or vice versa. So they took care of some of this imbalance here, and then they decided to take all the imbalance out. Why is that? Well, look at this previous move that they did here. Remember, they didn't mitigate this area yet, so they had to make their money back. They did it with all this imbalance here, but they had to do it here. You guys see what I'm talking about? So that's what they had to do. Now, at this point, price is oversold, and I see that on the RSI. So if I had let my second partial trade run all the way up and I saw that, I'd be making my exit. But to be honest with you, depending on the lot size with this huge move, I probably would have been out of trade because I would have definitely made my money for the day, unless I just wanted to be greedy. But that's typically how I actually trade in the market, getting the big moves like that. And so now you instantly, but guess what? Now you got more imbalance here that they're going to have to fill. So now they're going to have to bring price down to medicate half of this. Okay. So now they're probably going to bring price up, and it's hitting a lot of liquidity up here probably. Let me turn on the order block indicator. See if you see order block up here. Yep, see, red order block. So it's grabbing liquidity, which means it's probably going to sell down. So let's see if it does sell down according to this order block. I will play the replay tool now. Let me make it a little bit quicker. Hope this doesn't make it too quick. See that more order block and more liquidity. And it's grabbing all that liquidity. Let's see if it sells down. Yes, see, it's starting to sell down because now they got to fill half of that imbalance. Boom. So now in the EMA is confirming all that confirmation. So you could have got into another sell here. Now it kind of did a consolidation, and look what it did. It drops. See, I told you guys, all that imbalance that they created by this move, they had to come back to fill all that out. Look at this huge drop. Can you imagine getting into this drop as well? Yo, this is crazy. But that's why trading imbalances are extremely powerful. You get in the most consistent moves. And this works on anything, guys. Forex, futures, indices, crypto, it's the same thing. It doesn't matter. But look at that drop, and it's still dropping. Still dropping. Grabbing that liquidity, but now they got to bring it back because guess what? Now they created more imbalance with this move here. What you think they're going to do? They're going to have to buy that back up eventually, but they got to make their money back. Let's see if they eventually bring price up to back to that point again. Let's just let it play for a minute. Let's see what they do. They might bring it up here. They probably push it down more, but eventually they're going to have to bring it back up here. But guys, you get my point so far. That's what they got to do. Yeah, so that's basically how I trade in the market, guys. That's pretty much it. That's what I do. I'll go ahead and pause this recording. And we can just do a Q&A or chat and see what you guys think. All right, guys, so that's it for this back testing session. So I'll see you guys again next time. Take care.